Yeah, I think you're right to focus in on China as an important source of risk for EM. China is 20% of the EM benchmark. It's just under a third of EM GDP. So how China performs is important. But it's very important to understand how the Chinese economy really is developing. China looks like nearly every emerging economy towards the end of its high growth period. It's had to resort to debt and investment-led growth in order to maintain high growth rates. That isn't sustainable. The Chinese economy will continue to slow down. What's good news for equity investors is the Chinese equity market already tells you that. The banking valuations are very, very low because the equity market doesn't believe in the current growth model. So, I see China as an economy that will continue to slow. They'll probably have to have another mini stimulus. And that may weigh on people's enthusiasm for EM. But if you look at what's priced into equity markets, I think we're already there. Well, you see, it's actually quite a nice environment for India. India's terms of trade will continue to improve as commodity prices weaken, reflecting the weaker demand out of China. And India tends to be more exposed to European and US demand for its exports, particularly its exports of services, with the IT industry really a direct play on what's going on in the United States. So I think the combination is profoundly bullish for India. I think the answer to that is no, you shouldn't. There are fundamental issues in Turkey that are resulting in weaker economic growth. It runs a very large current account deficit, more than 7% of GDP. So if you've got weakening growth, a large current account deficit, it is difficult to attract equity capital. And in order to attract bond flows, you need to offer higher and higher interest rates, which is effectively what the CBRT was doing yesterday. And in offering higher interest rates, it has a negative impact on the equity investors in that you slow down growth. So I see these as specific issues, and the smart money will use it as an opportunity to buy into the markets that don't have those fundamental problems but are being sold off for the wrong reasons. Yeah, I have a view that you should be bullish emerging market equities. You should be long Korea, Taiwan, India, Mexico, Thailand. And you should also be bullish EM fixed income. My colleague Joyce Chang, who does fixed income strategy, she's just upgraded EM debt to overweight. There's a lot of value in this asset class, and there are many irrational fears, and we see the diminishment of tail risk perception as being a very important driver of EM equities, and that includes Indian equities.